Guidance continues to evolve, and in some cases will continue to change. Just like each of you, we want to continue to track it closely and update our AOS COVID-19 resources pages as new developments occur. Check out the GASB Emergency Toolkit on the AOS COVID-19 webpage for guidance on GAAP accruals and disclosures related to COVID-19 as well. Certainly, these items are designed to assist in managing and preparing your financial statements. As a reminder, Ohio OBM is the pass-through agency for the Coronavirus Relief Fund monies distributed to local governments under House Bill 481 and House Bill 614. The OBM has some great FAQs and other resources also available on their website, so make sure you check them out as well. Per the CARES Act, recipients must use Coronavirus Relief Fund payments to cover costs that meet these three prongs. Let's not forget these all have to be met. 1, are the necessary expenditures incurred due to the public health emergency with respect to COVID-19? Meaning, was the expenditure incurred because of COVID-19? Number 2, was this an expenditure that was not accounted for in the budget most recently approved as of March 27, 2020? And number 3, were the incurred expenses incurred during a period that begins on March 1st and ends December 30th, 2020? Those are the three prongs that it has to meet. Now, there are other things that are going to be factors in meeting those three prongs, but those are what we call the three CARES Act prongs. Documentation of how decisions of local government are spending their CRF funding is going to be critical to meet those prongs. Be sure to document how you're meeting each prong of the three-prong test. While not required, we also highly recommend that governing boards memorialize specific decisions, particularly those decisions that are significant, about CRF spending in ordinances and resolutions. Now, in some cases, they may actually be required. If you make a purchase for fire gear, for example, process should be to obtain a request for the items from the fire department, run it through the prong test, document each one of those prongs with how it satisfies with the reasoning and legal authority, if appropriate, and then move forward if it passes all three prongs of the test with an appropriate ordinance directing the purchase. Treasury, OBM, and the Auditor State FAQs can be helpful with this analysis as well. OBM and the Auditor State both have guidance on their COVID-19 resources web pages pertaining to making subgrants of CRF, CARES Act funding to small businesses, other local governments, and the like. Be sure to check out this guidance if you are going to be giving or granting money to others, such as, for example, a township giving a subgrant to a school or a small business grant program. All of this is important because all of those subgrants are going to be essentially a grant from you. Remember that you may need to consult your legal counsel if the matter gets complex. When it comes time for an audit, our auditors will be required to question any expenses that are unallowable. This means that local government would be responsible for returning the federal monies that were spent on unallowable items to the federal government. Separate accountability requirements do apply to the CRF. Local governments should deposit their CRF monies into an account that is for those expenditures in a separate special revenue fund. It is okay for local governments to deposit distributions from OBM passed through their counties under both 481 and 614 together in the same revenue fund, since the monies were received for the same purpose and from the same source, OBM. UAN clients. For UAN clients, the Coronavirus Relief Fund numbers are as follows. For township, the fund number for CRF received from OBM under 481 and 614 is fund number 2272. Fund number for CRF received from other local government subgrants is 2273. For villages, the funds received from CRF from OBM under 481 and 614 directly are 2151. And for CRF received from other local government subgrantees is 2152. Both of those numbers are available from us. For local governments not on UAM, set up a separate revenue fund for CRF distributions received from OBM under both 481 and 614 allocations. If you also receive subgrants from other governments, use a subfund or a special cost center to separate those subgrants from the OBM portion of your CRF awards. Any unspent funds remaining at the end of the year will need to return to the grantor agency, such as OBM and other local governments who are making those subgrants. Confused yet? Well, when you get confused on any or all of this, make sure you ask us. Reach out to us. We have a very dedicated staff, one of which is going to be on here to answer your questions, Marnie, and our entire team. They're there to help make some of this clear as mud. And the fact of the matter is that's why our frequently asked questions are out there. That's why these informations on these calls are all being recorded and put out there for you to watch. And so if you have other people that need to see this or you need to see it again, you can go out to our website, you can pick up this information, you can watch it again. Now, with regard to House Bill 614 as amended and House Bill 481, as follows, the following applies. One, House 614 clarified for 481 that local government does not need to adopt a resolution or ordinance to accept the 614 funds if you had already done a resolution to adopt 481 funds, because 614 is continuation of 481. So you only need to do one resolution to adopt. 614 also delayed the date by which local governments are to send unencumbered CARES Act funds to the county treasury from October 15th, which is already passed, to November 20th. It requires the county auditor to redistribute unencumbered CARES Act funds to eligible local governments by November 25th, 2020. This effectively reduces the turnaround time by 2 days. It utilizes, 614 utilized the most recent census estimates published by ODSA in place of the 2010 census estimates. It increased from 25 to 50% the share of redistribution funds sent to the county, assuming the county encumbers all of its funds, if fewer than 25% of the townships and municipalities do not encumber all of their available CARES Act funds prior to the November 20th deadline. This amendment has the effect of ensuring that counties that qualify to receive will qualify to receive a more balanced redistribution should few local governments in a county fully utilize all their funds. The 614 also delays the date by which local governments must return unspent funds to the state from December 28th to February 2021. However, this amendment reiterates that these funds may only be utilized for pandemic-related costs incurred no later than December 30th, 2020. While you don't have to send the monies back till the February 1st, 2021, they still have to and can only be used for expenses through December 30th. This extension is to aid for accounting purposes only, and all expenses must be incurred by December 30th. Now, as so much with CARES Act, the Congress is about to come back in session. It's very possible that they extend these dates or make changes. So this is the ruling and the guidance as of today. Who knows what happens tomorrow? And in this area, that's why we always encourage you to get the current guidance as you're making decisions. Make also a note of the guidance you received when you made spending decisions, because if something changes subsequently, we will certainly try and give you the benefit of the doubt based on the guidance you were operating under at the time you made the decisions. So if you haven't already done so, check out OBM's FAQ updates from October 1st. They now include FAQs pertaining to these 614 amendments. Now, we have received several questions about how to interpret the encumbrance requirements in 481-614. Encumbrances should follow the normal PO process, which may include the issuances of regular purchase orders, then and now certifications, blanket POs, and super blanket POs. Direct charges, such as payroll, are not normally required to be encumbered. However, in light of the specific language in 481 and 614, entities should consider encumbering eligible direct charges for the CRF anyway. The accounting system that you have doesn't permit the establishment of a PO for a direct charge. You should work with your legal counsel and consider whether having the governing board pass an ordinance or resolution to effectively encumber such charges, whether that would be a viable option to legally encumber the CRF direct charges. The resolution or ordinance should include information that would normally be in your PO. OBM has added similar guidance on their FAQs as well. So look, again, it goes back to the authority. You want to make sure you have authority and it's clear from your legislative authority. Remember that the single audit threshold, this is an important distinction, is $750,000 in total federal financial assistance that your governmental entity gets in total. The trigger is how much you spend, regardless of how much you received. Be sure to let your auditor, meaning us or your IPA, know if you think you're going to need a single audit for fiscal year 2020 due to the additional federal spending, whether it's CARES Act money or otherwise. Because once you trip that in all funds, it's not in any one grant, it's all federal money, you trip the federal single audit. Finance officers should be actively communicating with their department heads to identify new COVID-19 federal funding that departments may be entitled to receive and or that have applied for. CRF is the largest COVID-19 program, but our office has identified more than 90 programs that Ohio local governments could receive based on application or participation in pre-existing federal programs. It is important for finance officers to make sure you identify federal programs with COVID-19 assistance because they must separately identify COVID-19 programs on your federal schedules. Refer to the AOS COVID-19 webpage for COVID-19 federal funding spreadsheets listing the potential programs where assistance is available. The AOS COVID-19 resource page also includes a federal schedule reporting example for non-COVID and COVID-19 funding for the same program. The federal OBM initially extended, this is important, they initially extended single audit dates and then rescinded them for certain fiscal years. The following deadlines are in effect for local governments with December 31st fiscal year ends. For fiscal year ending December 31st, 2019, single audits must be submitted by December 31st, 2020. It was a 3-month extension beyond the normal September 30th deadline. For fiscal years, however, ending December 31st, 2020, single audits must be submitted on time on September 30th, 2021. There has been no extension currently in effect. We are told that OBM has no current plans to provide further single audit due date extensions, but we have been advocating strongly, along with other auditors around the nation, for them to reconsider this decision in light of the late single audit guidance. Now, that was a lot of information. I want to go ahead and open it up for questions. And the sure thing you need to know is that our office is here to help. If we can't get to your question today or we're not able to give you a direct answer, we will try and get back to you. Please reach out to your liaisons, and in the end, we will try and answer every question the best we can based on the guidance and the information we have. So the way to ask a question is there is a raise your hand button on your app. Please go ahead and just click it, raise your hand, and we will take your question live and on the air. We'll ask you to unmute and have you join us. I always think those are a little better than the other kind. I guess there's another way to do questions as well. You can type a question and our people will try and read that, but I would always prefer the live participation so we can certainly get to your question and understand what you're asking. So with that, let's go ahead and open it up to questions. Our first question. We have one. Let's see if it's coming up here in front of me. The first question is from Debbie Good and the village of Greencamp. That's what it says here. Debbie, go ahead and unmute. You're on the call.
So, can you hear me?
I can hear you great, Debbie. How are you today?
Oh, good. So, I really didn't have a question, but I am going to ask now. So, when you're talking about the single audit, you have to make more than $750,000 in the federal money to be required to do a single audit?
Yes, if all of your federal funds total, whether it's CARES Act and other funds, it aggregates more than $750,000, then you trip a single audit, and we need to know about that so we can get you set up for a single audit as part of your audit.
Nowhere near that, so good. I wanted to understand that. So I've been working on my stuff. I'm going to ask this and make sure I'm doing it right. I've actually issued a couple purchase orders. Everything is approved as in hand, touch-free stuff for bathrooms and everything. So I guess I've got purchase orders, quotes from places. Is that enough documentation together, or should I be writing stuff on all these?
Well, we've got, I do want to introduce Marnie Frederickson. Marnie is on the line with us. Marnie is our Chief Assistant Deputy Auditor, and she's our CARES Act expert. But the short answer is, as long as you're documenting your purchase orders and your records, and you have authority from your governing authority, your legislative authority, you should be meeting those expectations. Keep good documentation. Marnie, what did I miss?
Good afternoon, Auditor and Debbie. The only thing I would add to what the Auditor mentioned is making sure that any goods being purchased or services being received are rendered and received in hand by December 30th. That is the third prong of the CARES Act. So anything that you're doing, any contract work, such as going to a touchless faucet in your sinks, all of that would need to be done. That work needs to occur prior to December 30th. So that's another piece too that you'd want to make sure. And then taking a minute to document and explain why the touchless surface in a sink is an important thing with the public health pandemic. I mean, we all know we've talked about these things, but reference the public health orders and the CDC guidelines. That would be a good extra step just for documentation purposes as well, to show how you're complying with that first prong of being necessary due to the pandemic.
Okay.
Along those last lines, I think it is important that you document why it meets the test, why you're buying it. And look, just because you can make a plausible excuse as to how this is somehow related to COVID, it needs to make common sense. And so we always encourage people to pass the really test. If you look at this and you show this to your constituents, are they going to say, was this something you would spend your own money on? Was this a common sense good expenditure? And if you do that, you're going to go a long way. Document the heck out of it. People will know why you're doing it. There are people who have asked for all kinds of things that I can make a conceivable relationship, although tangential, to COVID-19 for various expenditures. But if it isn't a good nexus, you're going to have some issues. And by the same token, just because you're getting federal money doesn't mean you would waste that money and spend it on things that aren't necessary, or things that don't make sense in the long run. So you need to use that wisdom as well. So with that, our next caller is Diane Schaefer. Diane had her hand raised, so go ahead, Diane, and unmute and ask your question.
Yes, after the third round, and it's my understanding that the entities that don't claim their share are those entities that don't spend all of what they've received, goes back into a pot. But we might not know that until like December 20th. How are we going to get the purchase orders in place if we don't know the amount?
Marnie?
Hello, Diane. So a couple things there. There's two dates that you're working against. The encumbrance requirement within House Bill 481 and House Bill 614 is significant for the redistribution, and the redistribution is going to occur. The deadline for that is November 20th. So you have to have by November 20th everything encumbered that you anticipate being able to spend on eligible expenditures by that date. Whether or not you actually are able to spend them before December 30th will be factored into any unspent balances that will need returned to OBM by February 1st. But for purposes of satisfying that encumbrance requirement, you have to be able to anticipate within reason as of November 20th and have everything encumbered by that point in time. So it is a challenge. But they do give you the latitude to use judgment and anticipate and identify the expenses you believe you can encumber as of that date based on what you anticipate being able to spend and having incurred by December 30th. So goods received, services rendered by that date.
I guess my question isn't that part of it. It's if we're going to receive extra money due to the redistribution, how do we have that encumbered by December 20th if we don't know the amount?
If you're going to receive extra money by the as part of the redistribution, that redistribution will occur on November 25th. And then from that point out, you just would encumber through your normal process anything as you're going along and spending the money. The PO should be done as it normally would be under Ohio law at that point. The encumbrance won't be a necessary test for that last month of the year. In essence, for that last month between November 25th and December 30th, you just need to spend as much as you can and encumber according to Ohio law as usual. That might include a then and now certificate if appropriate. And then any unspent funds that you were not able to use up by December 30th would get returned to the state on February the 1st. So they give you a little bit of a liquidation period after the end of the year to continue paying invoices that might still be coming in. The key is that the services or goods were received and rendered by December 30th, even if you're still paying off some trickle off bills after the end of the year.
Okay, thank you.
Does that answer your question?
Yes.
Good. Now, where are you from?
Perkins Township and the village of Rocky Ridge.
Thank you so much. We're just trying to know who's participating. And by the way, this is a good time to thank Julie from the Seneca County Auditor for helping to set this up. She called us and we had done some of these and said some people had some questions. So we're happy to do it and happy to get you the information. And always remind people, contact our folks and certainly our regional customer service rep will be happy if you have any questions to try and make sure the questions get back here as well. But we always like to deal with them directly right now. So next up is Courtney. Courtney Blumenstadt. I hope I said that right. Courtney, go ahead and unmute and let us know where you're from and ask your question.
Okay, I'm pretty sure I unmuted myself, so let me know if you can. Okay, so our board has chosen to allocate the CRF funds to our police department personnel. And if I am understanding this correctly, and I have minutes to prove that they had gone along with that. So do I have to have legal draw up an additional ordinance or resolution allocating those funds to be used? Because it will be a direct and personnel you can't really, write that purchase order for. So is the approval in the minutes enough supporting documentation for the usage of these funds, I guess is my question.
My short answer is I always like specific ordinances and resolutions because it makes it easier to audit, but probably the minutes are would be enough, push comes to shove. It's just always to have better and look, you're in a time frame where you should be able to do that. Now, remember, this is an area that's a little bit of a sticky wicket when you allocate it to direct replacement. Right now, the CARES Act has not been authorized by Congress to do direct revenue replacement. And you've gotten some conflicting guidance from Treasury on this issue of just direct public safety replacement. And so it's one thing to say, we're just going to directly replace their budget and take that money and use what was public safety money for other purposes. There's some guidance that indicates you might be able to do that. But if you look at the three prongs of the CARES Act, that's going to violate the one that says wasn't previously authorized. And so there's some conflict there. And this is an area that guidance could be changing on. And so the question that we're trying to ascertain is, look, we've said all along, we would prefer that they just open up remaining CARES Act money to revenue replacement and recognize that and stop doing these situations. But Marnie, why don't you talk just a little bit about this whole dilemma on public safety forces and just using it as revenue replacement versus tying it specifically to COVID-related activities that your safety forces were performing. Look, if you were doing 30% more runs because of CARES Act, or it was taking them 20% longer to clean the cruisers because they did a run because of COVID, that's easy. You can justify that like that. But when you do complete revenue replacement, it starts to be a problem.
Right. So, Auditor, we had a period of time there where within the U.S. Department of Treasury, they have two offices, the program management side and the Office of Inspector General. It's important to know that the Office of Inspector General is the group that is responsible for writing the audit guidance that we have to use when we're doing single audits. And they'll be the group providing oversight of the states and how they spend the money as well. But the Program Management Office is the one that has been maintaining the FAQ document that you see on U.S. Department of Treasury's website for CRF. And at a point in time in September, the Program Management Office said for administrative convenience, you could go ahead and pay for all your public health and public safety employees out of the CRF fund and not have to maintain any documentation for that.
Mhm.
The Office of Inspector General took exception with that. And we believe in part that is because ordinarily in federal programs under the Uniform Guidance Act, there are certain positions within every department that are administrative in nature. And when your position is administrative, it's difficult to suggest that 100% of your time is being spent on one specific purpose. You're an administrator, you're doing multiple different things. And so for about a period of a month, the two were in conflict with each other. At the end of October, they have reconciled their guidance. And as of right now, as of today, the OIG is in agreement with the Program Management Office that they will accept for administrative convenience public health and public safety workers' time being charged to the program with minimal documentation to be kept. And you can see the history of that reflected within our Auditor of State FAQs. We have all of that outlined and the dates on which everything changed. So you can kind of see how the guidance evolved. But they literally did a 180-degree flip-flop on this issue. And it still concerns us a little bit until we see firsthand what we're going to be charged with auditing on whether or not they would truly accept positions like a police chief or a fire chief being charged 100% to the program. So keep those things in mind because the CARES Act itself is the law. So the three prongs that we've been talking about are what are rooted in the CARES Act. The FAQs are non-authoritative guidance that Treasury puts out. So we're all trying to utilize them to get a sense of what Treasury will require. But at the end of the day, everything needs to be rooted and tied back to those three prongs. And that's the important part there. And then to your second question, I think you were asking, do you need to have an ordinance or resolution to encumber the funds that you want to pay for your police and safety workers?
Yes.
Okay, and so for House Bill 481 and 614 purposes, in order to avoid redistribution, you should go ahead and pass that ordinance or resolution and include within it anything that you would ordinarily put in a purchase order. So all of the information you would ordinarily have in your purchase order, put in the resolution or ordinance. We've tied that back to 5705, Chapter 5705 in the Ohio Revised Code as an acceptable alternative to a traditional purchase order form. So I do think it'd be advisable just for purposes of that redistribution process to go ahead and put it in that resolution or ordinance.
Okay. Oh, thank you. And I know that my entity's situation is a bit different, and I don't want to take up anyone else's time if there's any other questions. We unfortunately did have almost our entire police department was wiped out by COVID for a period of time. And then, hiring more people to come in and make up for those hours, and then the hours that they spend, cleaning the cruisers, for example, or cleaning, doing whatever, patrolling and whatnot. That was the basic backbone of why they chose to put the CR into the police department operating fund specifically for their personnel.
Yeah, certainly to the extent that you can show you had additional expenses above what was budgeted before March.
Okay, got it.
Those are clearly related. But again, assuming you budgeted something for your police department, the argument is going to be how do you meet those prongs?
Right. Okay.
With things that are otherwise in. We've given advice in other areas that unless you're paying sick time over and above your pre-budgeted sick time allocations, those expenses generally aren't allowed. They're not going to meet the test. And
Okay.
so you're going to have to just be careful with that. And again, we're trying to answer this with confidence and giving you advice that's going to keep you out of trouble.
Right.
Choose to take a more liberal, although it may be allowed, approach. Just know that there's risk that the guidance changes, because the
Gotcha.
guidance has been changing consistently. So if you go
Right.
back to those statutory 3 prongs, meet
Mhm.
those 3 prongs, we think you can find ways to spend it within those 3 prongs
Okay.
and meet your needs. So
Great.
again, just be careful with that guidance. Can you maybe get away with doing it? Maybe. But certainly if you're going to do that, make sure you document the heck out of it as to why this was different. Why, because of COVID wiping out your department, you had to pay extra people and you had to do all those things. That certainly is easier to justify. Okay,
Okay.
Debbie Good has her hand raised again. Welcome back, Debbie.
Thanks. One more quick question. I'm confused at this December 30th. So the Village of Green Camp is giving most of its money to the Green Camp Fire Department. He's wanting to order turnout gear, which our prosecutor has said, yes, that would be covered because they need uncontaminated stuff. What happens if in the timeline, the gear isn't here by the end of December? Because sometimes it can take a few months to get that stuff. If we're invoiced and pay it before December 30th, is that kosher or not?
Marnie, my guess is it is, as long as you paid the invoice. But do they have to have the goods on site?
Treasury has defined the word incurred that is rooted in the CARES Act as being goods received and services rendered. So I think based on that definition, Treasury would expect that the fire gear would be in hand
Okay.
that the fire department would have it by December 30th.
Okay.
And if you think about why they put that requirement in there, they wanted to have it all spent within a time period, and that you actually had the stuff to serve the constituents during that time period. And so that's why they did it. Now, again, are these deadlines going to be changed? Your guess is as good as ours. The election's over, so maybe they'll actually step up to the plate and get to some of this in Congress. But the short answer is right now we have to give you guidance based on the information that's out there. And by the way, all of our programs on this are out there on YouTube for people to watch. And it's certainly out there. We certainly want to thank again, Auditor Julie Atkins from Seneca County for helping to set this up. And we certainly appreciate that. It is no small matter for them to get everybody organized and get this ready. So our next caller, Debbie, did we get to your answer, hopefully?
Yep, thank you.
I'm going to take that as a yes.
Yes.
Next caller is Joseph Badger. Joseph has your hand raised. Go ahead and unmute. Let us know where you're from, Joseph, and welcome to the call. Hey, Joseph, you're self-muted. Go ahead and unmute and join the call. There you are. Welcome. Where are you from?
Hello?
You're here.
I'm a trustee in Clay Township in Northwest Ohio.
Awesome. Thanks for joining us, and thanks for the work you do.
I have 2 questions. I've attended, I guess I'll say, several of these webinars over the last few weeks. And in one of them, the guidance was the goods and services do need to be paid for and delivered by December 30th. But it was said that in the purchase order, if we document that statement that they need to be provided and installed or paid for by December 30th, and that does not happen, we were still covered, and that would still be a good expense.
Marnie, that's a Marnie question. I sense that's a Marnie question right up.
So there's 3 key events as you're spending this money. First of all is the encumbrance for purposes of redistribution. If you want to avoid having to return unencumbered and unspent money back to the county for redistribution, you need to have everything encumbered before November 20th. And that should anticipate anything you're going to spend between now and the end of the year. So that's the first key date. Then you need to make sure that all your goods and services have been rendered or received by December 30th. That's your second key date. Goods and services rendered or received by December 30th. And then you have until February 1st, based on the House Bill 614 amendments that just passed, you have until February 1st to continue paying off any bills that are coming in related to goods and services that were received by December 30th. So they're giving you a little extra time based on the latest amendment to pay off those bills, recognizing that you might just get some things in right before the end of the year, but not have time to get the bills paid.
Excuse me, I understand all that, I guess. My real question is, for instance, it's the touchless faucets, touchless toilets, touchless paper towel system in our restrooms. We can document why that's necessary, et cetera, in minutes or by resolution. I do understand that, but that those items are in short supply. So the guidance in a previous webinar by, I can't recall who, but somebody at the state level, was that that was understood. So to cover ourselves, we would put a statement in the PO that we require everything to be delivered and installed by December 30th. If that doesn't happen, it wouldn't be a fault of Clay Township, because we tried to keep up our end of the bargain, for lack of a better word. And even though those goods and services might not be installed and paid for until January, that was still an allowable expense. And that was maybe 2 to 3 weeks ago in one of the webinars that maybe the township associations had, et cetera. And it was an attorney that was, giving this advice.
Darn
And
lawyers.
Clay Township has also hired separate outside legal counsel, other than the prosecutor, and that was our advice from the legal counsel also.
Marnie, what's your view on the audit? Look, we will generally be defer to well-reasoned legal authority. I jokingly say, as a lawyer, darn lawyers, you can't trust any of them. But the reality is, from an audit perspective, we think the guidance is relatively clear. Marnie, what say you?
Right. I would say, first of all, I don't think that's come from the Auditor of State's office, simply because we've taken a pretty defined position on this based on everything we've seen from Treasury and just our past experience with federal programs, and the fact that that December 30th date is actually spelled out in law. So it's difficult for us to give any advice that would in any way contradict that hard deadline that the law itself prescribes. I would encourage you to check in with OBM. As the grantor agency, I don't know. Everything that I've seen from OBM within their FAQs suggests to me that they've taken the same position that the Auditor of State's office has on that deadline date. But I would check in with them and see what Stacy Massey's thoughts are on that. She is the point person for the Local Government Assistance Program under CRF at OBM. And maybe that will help give you a little bit of reassurance. I do think, as we've mentioned, there's more than one way to interpret some of this guidance, and the guidance has continually changed, which has made it very, very difficult on everybody. But I would caution you, only because that is a date that is rooted in the law itself. It's not just within an FAQ, which is more of a non-authoritative guidance. That is a hard stop from our point of view, at least. And I think everything I've seen from OBM suggests to me that they've looked at it the same way.
Yeah, I would, again, as we said earlier, there are some high-risk behaviors and lower-risk behaviors. Certainly, we can be deferral to well-reasoned legal guidance, but if the guidance conflicts with the statute, we would argue it probably isn't as well-reasoned. And so, in that regard, the short answer is our audit guidance at this point, based on the instructions we've got, is that if you don't have it in hand or it's not delivered by the 30th, you've got a potential problem. Having said that, there's a chance that they kick the 30th date, and I would encourage you to have conversations with your federal delegation, your congressmen and or your U.S. senators to try and get them to kick that 30th date. COVID's not going to be over by December 30th, despite the best intentions of everybody trying to deal with it. And so there's an argument to extend that date, but that's not something we can do. It has to be done at the federal level. So hopefully we answered your question the best we can. You know, like I said, we don't make these rules. We just audit to them, and we're trying to give you the best answers we can based on the rules that are out there. Our next participant is Julie herself. Julie from Seneca County, the Seneca County Auditor, Auditor Atkins. You're on the call. Go ahead and unmute and join us.
Okay. Hopefully you can hear me. I've been having problems with my microphone.
You're coming in loud and clear.
Okay. First off, I want to thank you for taking the time to present this to the Northwest District. We are very grateful of that, and there's been some good questions, and I appreciate the overview you gave. The one thing that maybe you want to remind folks is about the interest on these dollars and how they need to account for that.
Sure, Marnie, interest?
Sure. The interest that you earn on any CRF funds that you're holding in your depository should be credited back to the CRF fund itself, together with the rest of the monies you've received, and it can be spent on anything that's eligible under the 3 prongs of the Act. You do want to make sure that you're encumbering that interest by November 20th in order to avoid having to return interest to the county for redistribution. So that would be another example of something that's ordinarily not required to be encumbered under Ohio law, but House Bill 481 and 614 would require you to encumber it in order to avoid it being redistributed.
And you can't use that interest for general fund operations. You can't take the interest for CRF money and put it in your general fund because
Correct.
it's a specialized fund. So you need to keep it in the fund that from which generated it. Julie, did we answer that for you?
Great, thank you, appreciate it.
Well, that's going to be our last question, and I want to reach again out to everybody and thank you for participating. 2 things. One, I do want to encouraging all of you, if you have questions, reach out to our customer service reps and folks throughout the area. You can always send an email. Normally, I give out James's email. Lori Brody is your customer service rep for your area. JM Coyne, JMCOYNE at ohioauditor.gov. If you have an email question to submit to us, we'll try and get you an answer. And certainly, we want to thank all of you for participating. I always like to thank Marnie. She's our rock star in this area. If you have I always call Stump the Auditor, ask Marnie a question. Send it to JMCoyne at ohioauditor.gov, and we'll get that to Marnie and try and get your questions answered directly. Also, I just reach out to Lori, and we'll try and answer those as well. But thank you all for participating. We know this is a changing area. That's why I asked my staff to audit this area, audit CARES Act money and COVID-19 related time periods with maximum audit flexibility. So to that extent, we want to help you help yourself. Document. Use your legislative body for authorization and ask us for audit guidance where we can. We don't want to play gotcha. We want compliance. And in this period, we're going to give you the benefit of the doubt where we can, but sometimes we just can't. We have to follow the law. So with that, thank you so much. Stay safe, stay healthy, and we appreciate you allowing us to serve you as your state auditor's office. God bless you.